Hi, good day, grade 12. Welcome to our lesson for fixed assets. So this lesson also applies to grade 11 and grade 10 learners. So we are using this as a baseline in grade 12 to understand how our fixed asset accumulate in a company. So today I want to calculate the depreciation using the carrying value or book value methods. The book value is also known as the diminished balance method. So when you're calculating the depreciation using the diminished balance method, you're going to calculate the percentage of the book value, percentage of the book value, which we say the carrying value. An asset. So every time you depreciate an asset lose value. So the value that is still left is called the carrying value or the book value. So let's type into the calculation. So here we will asset which with a cost of 20,000 rands, and we are depreciating it using the diminished balance method. It's 10%. So how do we calculate for the depreciation you were given? The percentage ends at the end of the year. So for the first year, the cost is the book value. The cost is the book value. So we are going to use the cost as the book value. Then we say 20,000 multiplied by 10%. If we calculate your benefit, 2,000 runs. So this becomes the accumulated depreciation. Each time you calculate depreciation, you have to apply the depreciation. Accumulated depreciation is it's a negative asset, which shows how the asset lose value in this useful life. So the book value at the end of the year will be 20,000. Subtract the accumulated depreciation, which is 2,000. The amount is going to give you 18,000. So when you start the second year, you're going to start with the book value. So now you're going to depreciate the asset using the book value, which is, or the book value will be carrying value of the asset 18,000. So at the end of the second year, the depreciation will be 18,000 multiplied by 10%. If you press a calculator, you get 1,800. 1,800 is added to the already accumulated depreciation of 2,000. So this is going to give you 3,800. So your accumulated depreciation now becomes 3,800. And to calculate the book value, and now we are using the book value at the beginning of the year, at the beginning of the second year, which is 18,000. Subtract the depreciation that was calculated for the second year, which is 1,800. This is going to give you the depreciation at the book value of 16,200. Okay. In the following year, your book value becomes your book value. You will not use the book value to calculate the depreciation from the end of the third year multiplied by 10%. This is going to give you 1,620. So 1,620 is going to be added to the already accumulated depreciation. This is going to give you the accumulated depreciation of 5,420. Then to calculate the book value at the end of the year, now we take the book value at the beginning of the year, subtract the depreciation which you have already calculated, which is 1,620. This is going to give you the book value of 40,580 if you do the subtraction. So to calculate at the end of the 40th year, I'll take the value at the beginning. This count the book value at the beginning of 40th year. Now to calculate this 10% at the end of the year, you get 1,458. So 1,458 is going to be added to already accumulated depreciation for the 3 years that the asset was depreciated. This will give us 5,420 plus 1,458. Amount that you get is 6,878. Then the book value at the beginning of the year, subtract the amount of depreciation that was calculated, 1,458. This will give you the amount. If you do the calculation, give you the amount of 13,122. And in the last year, at least end of the fifth year, so to calculate value the depreciation for the year, see 13,122 multiplied by 10%. This will give you 1,312 rands 20 cents. So this amount is going to be added to the already accumulated depreciation for asset for 4 years. So which is 6,878 plus 1,312 rands 20 cents. This you gotta give the accumulated depreciation of 8,190 point 20. That is 20 cents. So to calculate the book value at the end of the fifth year is 13,122, subject to the depreciation. And for this going to you're paying 11,809 ounce 80 cents.